Well, John, I think it's just going to be you and I talking for a little bit until anybody else decides to show up, and it'll help, assist too if they show up while we're talking. So it's all good. So, what gaps can I fill for you, brother?
Yeah, I would like to kind of refreshed on outline. I know there's a coaching element associated with this.
Yeah,
So I'd like a kind of just refresher outline on what the coaching entails. And then I'd also like same thing of kind of a bullet point of what tools are associated with
sure,
joining.
sure. So I'm curious, what was the main thing that kind of brought you into to sparked your interest in working with us, and like what do you do right now? I just want to get a feel for where you're at, so I know how to kind of explain it in the right context.
Yeah, 23 years of residential loan officer, um, and 3 years as a licensed real estate agent. I don't do a really, I'm a licensed real estate agent, but I don't, any business that has come my way, I refer to someone else and just collect a referral fee.
Right,
Um,
right.
and then um, I've recently started doing some private lending.
Yeah,
So connected with a company, private lending and everything, and I just like co-broker it or co-broker it.
yeah, yeah,
I just
yeah,
hand it off, they close it, and they deposit a commission in my company's bank account.
yep.
Uh, and so it's just appealed to me, just even as a residential loan officer. What hit me the biggest thing, and I tell my wife, I'm like, and that maybe not today, but for pretty consistent for a couple of weeks. Like I said, Tammy, I get 3 people a day that reach out to me, want to have a conversation about hard money or private money lending and what project they have going on. And I'm not getting 3 calls a day for mortgage applications.
Yeah,
So,
yeah,
uh,
and imagine if you were marketing for it, and really focusing on that. Uh,
yeah, doing
Getting
very
more
little.
economic. Yeah,
Yeah, very little
I
marketing, if
got you.
it.
I got you. Well, what's your hesitation? What's stopping you from just going full bore on your own? Because there's minimal licensing. You could probably do it on your own if you figured it out, kind of walking through the trench. But I'm just curious, what's preventing you from just going full bore on your own um, at this business?
Yeah, probably what's prevent from going full bore is that, do I want to just keep kind of co-brokering? I'd like to understand the workload better associated with it, because the reality is, yeah, I've gotten to a place now, which without boring you of the details, but in my opinion, the COVID years and coming out of the COVID years were, I mean, should be written about in real estate history. Luckily, I had a mentor, and he told me to focus and said, he said, instead of taking all those mortgage applications, John, that are pouring in, let your team take them, buy some properties. And I did. Luckily, I listened to him, and I did. And I was able to flip a handful of properties, ridiculous returns during those times. Um, just ridiculous. And so a nice windfall is associated there. As 20 years being in the mortgage business, the refis couldn't keep, my team could hardly keep up with the incoming phone calls. And so that, again, was just a nice financial windfall. So much so that I was really wanting to exit the residential side, and during those same years, as my wife was working at her job, which she's at a company called CoStar, which has are you familiar with CoStar?
Yeah,
Yeah. Yeah. So she's been working at CoStar now 6 years, and just continue with promotions and opportunities and benefits. So her income, and I could basically retire.
right.
So I did. I said, I'm out of here of this residential stuff. And kind of like I said, fell into the private lending almost accidentally. And but also, I have responsibilities of your question. Why don't I jump in full time? I have 2 children that have special needs, and so as the wife's doing that, I'm have some responsibilities that occupy my time on a daily basis with my
Sure,
boys.
sure,
So my
sure.
question is, like, how much is that really going to, if I jumped in at full time, like you said, both feet, um, what does that really look like? That could I do that? right now I hand something off and I don't even know what's going on. And then they
Right.
say, "It's payroll, John, you got paid today." I'm like,
Yeah. Well, I will say, I mean, residential brokering and commercial brokering are very similar in terms of the time commitment, and I would say even the stress levels. So, it's actually might be a little bit more stressful brokering private money loans. And the reason why I say that is because there's more pressure from investors than you get from your residential guy, right? There's more people are a little bit more relaxed. On that end. I would just say that just because on the private money side, I mean, you got people who we want to close in 14 days, and it's like we better close in 14. They shorten the timelines, they waive a lot of like inspections, things like that, right? So it could be a little bit more high pressure than you might be used to. I mean, you invest in real estate, so you understand how aggressive the offers you might need to do in order to snag up some of these properties. Um, so just to kind of give you a realistic expectation, it's definitely not going to be as easy as just referring leads off, you know? And, but it's going to be as difficult as you want to make it at the end of the day on how involved you want to be. So if you want to, if you want to be making a lot of calls throughout the day and really working this business and, making steady revenues, then, that's one way to do it. If you're going to kind of sit back and do this as a side gig, then it doesn't have to be as stressful as you want. So I that's my only point to that matter, brother. I don't really. It depends on how much you want to put into it, I guess.
right. So I don't know. I know there's some other people on this call. Again, I don't know if they're necessarily on the call or whatever. It's just pretty much you and me. Because I don't want
Nobody
to
else.
occupy the time. Okay. I didn't want to like,
Nobody else truly.
okay.
I got somebody. I got somebody's AI taking notes. Eddie and Jimmy are. You probably met Jimmy, right? Did Jimmy do the consultation with you initially?
No.
Alex?
Yes, Alex. Thank you.
Got it. I have Jimmy. Jimmy's one of our guys, and then Eddie
Okay.
is an appointment setter over here. So they're just
Gotcha.
watching. Just
It's
it'll
just
help
me.
them get some insights onto our program, brother.
Okay,
Um,
cool. No
yep.
problem. I just didn't
Well,
want to occupy and keep talking
yeah,
like,
no,
when is that going to
you're
stop?
good.
So to go to your point, then we'll keep going with that of how much you went to. So like I said, so I mean, I'll be completely transparent. What I did is on TikTok, scrolling through TikTok, I found this company called True Finco in Florida, and it's just this gal Sarah that just puts a lot of TikToks out, and I thought this sounds pretty stinking good. And I just reached out to her and said, "Hey, I'm in Charlotte, North Carolina, extremely robust place in the United States and in the country, whatever. And I've been doing residential, whatever. I got a ton of contacts and reputation and credibility built up. And these are the people that are working with investors and they're entrepreneurs themselves to a certain degree. And what do you think about hiring me?" And she said, "Well, we'd hire you. We're very interested in hiring you as a like co-broker 1099 employee." I said, "Great, let's do it." She sent me over some basic information about some programs. A couple of them, the two maybe mostly that I leaned into is their fix and flip and their unsecured, uh, uh, what do they call it? Capital stacking.
Oh yeah,
Um,
credit card stacking.
you got it. Yep. And
Yeah.
I was like, that'd be perfect. And I've done maybe a half dozen TikToks myself and made a half dozen posts on Facebook, basic stuff. And I don't want to say blow up, but I mean, out of just basic stuff putting out, I get someone reach out to me at least every day now. Like I said, there was time there was three people reach out, three individuals a day, and I haven't put out any content probably 2 weeks. But still person today and people that I know in my circle that have just said, "Hey, John, I had no idea how many people were looking for private money and hard money." And this is a friend of mine that's a loan officer that he's like, now it seems to be coming up a topic conversation. I'm just letting you know, I'm referring everybody over to you, buddy. I'm like, cool. I'm not even doing
Great.
anything. So
And
my wife being at CoStar obviously has that commercial kind of connection and vibe. So she's like, I want you to run with this thing. I want you to get a website. I want you to get your CRM. I want you to start
okay.
content. I want you to run with this thing. But so, um, because she's like, I think that'd be awesome. And I'm like, I think it would be too. But
Yep.
again, I don't I don't want to work hard.
Yeah.
I don't.
I got you. I got you. Well, what's she paying you as a referral fee, man, for your deals?
I get I get 40% of some programs that are just a 100 base points, so I get 40 basis points.
Yeah.
And on the capital stacking, I get 160 basis points.
Gotcha. So 40 basis points is the standard that you're making on your referrals from the real estate stuff.
Yeah, yeah. Except the capital. Yeah, yes, yes.
Got it. Got it. Got it. Not bad for not doing anything, as long as she's communicative with you and, you know, you're able to, track and get paid and she's honest.
But so far, so good. The
Yep.
first paycheck came in last week, and this one, and then my notification of what I'm gonna get paid on Friday.
Yep.
Of this is what you'll be paid this Friday. So
Yep. Well, I'd say that's not bad. Um, Normally we pay our referral partners, and the standard that we set up for our firm is about 25% of the total commission that we charge on a deal. So it'd be 25%. So if it was 2 points, you get 50 bips. If it was, 4 points, and you get a full point, right? So that would be the commission structure that we have set up, and that's what we train our guys on. But at the end of the day, we're teaching you how to build your own brokerage, your own thing, through this accelerator, right? So the point of this call is just to kind of talk about that accelerator. But yeah, I mean, if you want to be a referral partner with us, we can always talk about that if you want to relax. But if you're not relaxing, man, it's real work. It's real work for sure. So
okay.
she wants you to run with it, but she doesn't see how much work that happens behind the curtain. So
Yeah,
you know,
yeah. She just like, you did it for 23 residential, and by the end I was just hating it.
yep,
Anyhow, and she's like, yeah, there's going to be so much opportunity. And even as I said, I'm a licensed real estate agent as well too. And I went into the office today. They had a training, and just I mean, it doesn't matter. Just my
yeah,
3 years of being in sales as well too. It's just this group they had of what they're going on. It just blows my mind how elementary. Anyhow, so a lot after it was done is kind of sitting there. I was kind of helping a handful of them, and same thing. Some of them have been in the business for like 8, 9, 10 years, and I just can't believe the low level training that real estate agents get.
yeah, yeah.
It's just awful. But
Yeah,
anyhow,
it's the basic stuff. Well, hey
it's just
man, it's a similar thing. You'd be back to the grind we do basic training initially for people who are just starting out. So those kinds of guys. The one-on-one mentorship that we do, this is more like your individual roadblocks. And I use TikTok too. So you'll start seeing a lot of videos from me. So I feel you. Yeah, just overcoming your individual roadblocks to building your own business, developing it to be something bigger. But at the end of the day, if you started your own brokerage, like the way I have it, I'm removed from originations the way I set it up. So I don't talk to borrowers. I hardly talk to my lenders. And I have a loan officer, I have a loan analyst, and I have a processor. So I essentially built my business in a way where it's mostly automated. I don't hardly do any work. And at the end of the day, I will pocket normally between 50% to 25% of the total commission by running a brokerage. So setting all the systems up, I mean, I could train you up on kind of how to do that, but initially you're going to have to be the one who teaches your loan officers. You'd have to hire your LOs, go find the LOs, right? So that's the difference. But you would have your own brand, your own website. You'd be in a little bit more control. And so, yeah, that's the difference. We do have there's something I've been playing around with, John, which is more of like a branch setup. So you would be able to utilize our loan officers to essentially screen deals on your behalf. I haven't rolled it out yet. It's something I'm just playing around with, but you might be a good fit for that, where essentially we would put you in the same program that we always do. You get your website up, we get you a CRM, get you plugged into our LOS, and then you could essentially hire our loan officers to run with your files. So it's your brand and everything still, and they do all the placement for you. You would end up keeping, what you keep, and we just charge a flat fee per loan officer, monthly flat fee, because we manage the pipeline and everything. And then
right.
you'd have to pay them a percentage. So you could probably get yourself a higher percentage and carry your own brand at I'm just trying to kind of brainstorm here on what would work best for you. But that's how I set up my business, man. Standalone. I don't like talking to borrowers either. So I feel, yeah, that'll you can only do that for so long.
Yeah. That's actually what you just described is exactly how I had my residential for the last 5 years before I kind of like retired from it. Again, I still have my license, still have some agents that still want to work with me that call me. But I'm not pursuing it. And for the most part, people knew I kind of stepped away. And so what I'm getting at is I did for 5 years, I didn't pull a single credit report.
Yep.
5 years. I had Eric. Eric was licensed loan officer. He was the guy that just whatever was muddling through, but he had like 7 years experience. He was about ready to walk away from it. Then 5 years before, whatever. And I connected with him and I said, dude, you do all the work and we'll have a split. What do you think?
Yep.
I was like, I'll bring it in. I'll do the events. I'll do the trainings. I'll do all the cool stuff, fun stuff that I like to do. I'll do all the marketing and you do all the pushing on the loan. And he was like, I could do that. And so we partnered up and
Yeah. So that's where I see you moving this to, that way you'll have more control over the marketing, a better understanding of the loans, that get funded, the loans that don't. So you'll be able to kind of better focus your marketing. Because the one reason why I tell people not to be a referral partner is because you never really truly get to know the loan products well enough
right.
to fine tune your marketing,
Yep.
to get qualified borrowers, right? And the second reason, you don't want to be a referral partner is you lose control of the sales process.
Right.
Right. So you don't know if that person on the other end is doing a good job or, falling through the cracks. So those would be the two benefits. You probably would increase your closing ratios as a referral partner by running your own brokerage from a standoff perspective.
Right.
Now, the neat thing with our program, the mentorship and all that is you can plug someone else into it. So we'll train someone else in. So if it's Eric, for example, it's like you're the lead guy, but Eric's going through all the basic fundamental training behind private money and commercial loans that we have set up, basic laws of averages, tasks that you need to be doing like outreach and all that. And then as you hire, we even have like separate modules for strictly your loan officers where we're not giving away the business, like how to, build a brokerage so they don't want to walk away with you, but just enough information where you can train these guys, standardized training without, you taking too much more of your time. You just plug them into our modules and they go. So yeah, I mean, that would probably be the strategy I would do, John. If you want to maybe increase your commissions, your closing ratios and all that. But it's, obviously this would be a new business. So you create the business, we'd set you up with the website, the CRM. I don't know what package that they talk to you about, but we could build your website. We could line you up with a fully built out CRM, strictly focused on private money and commercial investors. Now those come with workflows. So, when a lead comes in, it starts texting and emailing. After 2 weeks, text emails, 6 months down the road, depending on what stage they're in. And so that's part of the program. And then you would obviously get our foundational training, our lender lists, everything you essentially need to run a turnkey commercial mortgage brokerage. I even have the LOS set up for you. So Dovetail covers our CRM, which is who we partnered with on our CRM. And then our LOS, we have, exclusive vendors on that end. So everything would be lined out for you, brother. You just have to make that decision on, this would be something I would imagine you're going to want to press and, be highly involved for, the first 3 to 6 to 12 months, right?
Yep.
It's a new business. And then hopefully have the thing running just like your old brokerage was. That's where, yep. And you can do it. You can absolutely do it. Everything I built out, I'm dropping my 10 years of experience in this industry on you all at once. And then you get those bi-weekly one-on-ones so I can help you work through your main issues. I imagine you only using those a few times because you seem like you can figure stuff out pretty quick. I could tell. And then I think you do fine, brother. Well, I think you do fine. Whatever roadblock you run into, that's where we do those one-on-ones. And then we do our weekly training call, which is there's a private area every week. Well, the first 3 Mondays of every month. So it's almost every week. And then we do our weekly lender Q&As. So every single week we bring on either a new lender or a lender that's in our database. We bring them on for those Q&A. So that's where we act more as your like your research and development side of your business. So you don't have to keep finding new lenders. Like we're already doing that for you. So you're part of that program. We bring them on live questioning, and then you get access to the archive. So that recording goes out every single week. And then part of that masterclass area that we call it our community, there's a deal room. So like if you're not sure where to place the deals, or your loan officers are unsure to where to place the deals, you throw the deal into the deal room. Me or one of my teammates will respond, tell you where we would place the deal, or how we would go about, that scenario. So, our key here, John, is just to give you the foundational understanding of how to do this business, the foundational partners for your business, and then the support and ongoing development with that. So you're not failing, I literally made this program because I've seen too many people fail trying to kind of crack the private money and commercial mortgage code. Because I've been repping a lender for the last 6 years, and so I do nothing but train like newer guys learning how to do the private money side. And there's a big struggle, and there are a lot of factors to that, but mostly it has to do with the smoke and mirrors and the lack of regulation in private money. So I said a lot, but the point I'm trying to make is we created this to solve all those problems that you're going to run into at the end of the day when you're doing this business.
And also, do you like a mastermind group? Is even if it's a Facebook group, all your loan officers are a part. Like, hey, you run a scenario. Hey, everybody, blah blah. Got this scenario. Got this guy, dozen condos. He wants to do is there that, or that's just the scenario desk thing?
No, it's a good question. So I don't have a Facebook group. Ours is a private community. So I have a Facebook group, but that's not what it's for. It just exists because it's supposed to exist. But I have it's a private group. So you just go into the private area, you throw the scenario in the deal room. It's going to be us who responds. But it wouldn't be a bad idea to have more of a kind of public community. The only issue with that is you're going to run into the same crap that you do with all the other public communities, is the smoke and mirrors of the private money lending space, where anybody can show up as a lender, even though they're a broker. So
I was saying like a private group. So like a private group.
Yeah, this would be private. Yeah.
Only that you let in and only whatever. Usually
Absolutely.
the downside of that is sometimes then if you're not speaking to the authority, someone says like, I think you can send it to so and so and they'll do it. And you go, okay, great, good. I'm looking for this. And then you tell your client, whatever, then you send it and they go, no, that's not us. And someone's like, oh, I thought they did that. My bad.
Yeah. Well, we do our best too, right? So you're going to run into that even with our guys, but nobody's responding except for us. It's either my guys or my team. Typically, nobody else is going to respond. Everybody's doing their business, but we created more of a safe, transparent space. So you don't have to, get beat up by that exact thing, just like you're talking about.
Gotcha. And again, I'm not monopolizing the conversation here because.
Well, if anybody else wants to chime in, but John, there's value in just having a discussion with at least one person so everybody can hear. If anybody wants to hop in, feel free. I only see one other person on here that's not part of our team, and that's Charles Monroe. Charles, are you on, brother? Can you hear us?
I'm here. Can you hear me?
Yep, I can hear you just fine. Do you have any questions?
No, I have a call tomorrow afternoon. I've been in the mortgage money game over 30 years. So
cool.
I find your conversation intriguing. Clearly, we're working harder for less.
Working harder for what?
Less.
For less.
Working harder for less.
Yeah.
On the resi side, yeah, absolutely. Yeah, well, you can still make yield spread over here. So, I was just talking to somebody today. They're like, mind is blown that they're earning yield spread over here. You can charge 1 to 2 points yield and front end origination. So, there's plenty of money on the table. And investors are typically, they're more likely they understand the rate game to the simplicity of underwriting, and they understand they're going to have to pay more for investor loans. So they're just easier to sell compared to the residential person. They come to you, you'll lose by 1/8 of a point. It's just not it's not how it works over here. You can truly come in from a consultative approach where it's like, hey man, you might see that advertisement, online, but I'm telling you, I do these loans every day. This isn't a lender. You could say, like, I know what these guys are doing. And, there's no regulations on the advertisement space over here. There's no Tilla RESPA rules. So anybody can kind of hook people in. So you'll get borrowers and you can just take it from a consultative approach much, much easier. And you actually truly solve a greater problem on the private money side than you do on the residential side as a brokerage. Instead of facilitating.
You have more
I'm so sorry, Charles. You're breaking up. You want to try asking that
more
question one more
cooperative
time?
engagement as well.
Right.
There's a lot more cooperative engagement on the investor community. Did you hear that?
Yeah. So
Yeah, I've experienced that. Not to cut you off there, John, but I've experienced that too, Charles. So it appeals to me as well.
yeah, investors are easier to find. I mean, that's what I tell people. I used to, and by the way, John, like the space that you're kind of approaching, like you could be there's something called a commercial loan broker, which could mean a lot of things from like equipment loans to accounts receivables to credit card stacking, right? So you're approaching this industry that is actually huge, like really big industry. And the problem with being that commercial loan broker where you kind of do all things is you just lack niche focus and direction, and you kind of end up just casting too broad a net. You don't close anything. So that's where I come from. And by the way, I could probably get you a better deal on your credit card stacking. I would refer you to the direct underwriter. I was with did I talk about this last time? The credit card stacking at all?
Not that I recall.
So a little over probably a decade ago, I was with the firm that started that. So I can get you direct access to the underwriter who actually does the program. You'd sell it, but you'd make a lot more. Normally they charge around 11%. You would keep 60% of that, and the underwriter would take 40. And so instead of your low bips, you get a lot more out of that. Anyways, we could talk about that later, but I don't do those anymore. I do nothing but private money, commercial mortgage loans associated with real estate. So
I'll add to Charles a little color, John, to Charles as well too. I'll give you an example, Charles. And again, I've just been now dipping my toe into the private commercial mortgage world. Like I said, I've been doing some co-brokering, and what I'm getting at is just because of my relationships, and I'm sure you do too, 30 plus years in the mortgage business. My point is, I did a couple things on Facebook, this thing, and yes, someone I've built a relationship with over 15 years. I've known this guy, but he's a big time agent that throws me a bone like every other year when there's something, but he has like his go-to people that pay him money. And what I'm getting at is, as soon as I started putting some of that, he called me. He's like, buddy, explain to me what you're talking about, the capital stacking specifically. And I told him, he was like, man, I want to have you on my podcast next week. And he does a podcast. He's done it for like a couple of years. And all of a sudden, I'm this authority figure on his podcast. He's interviewing me, and I'm somebody who really has no idea. I know the moving parts of it, so I was able to describe it. And quite frankly, I'm excited about the idea, so I was able to bring it. But what I'm getting at to illustrate what you're talking about, Charles, is that burnout factor in the residential side of it. There's loan officers are a dime a dozen, man. They're especially here in Charlotte. I'm not exaggerating. There are probably 3,000 loan officers here in Charlotte, and I don't think I'm exaggerating, in Charlotte, North Carolina, in the greater Charlotte, North Carolina. But man, when I'm talking about private money or hard money, oh my gosh, everybody's ears are perking right up, and they're leaning to me in a second, but they're not going to be perking up with residential. Just thought I'd add that, Jim.
No, definitely. And I found, investors, like you're saying, like are willing to network, share secrets, share information, I found they're just a lot easier to find. I guess the point I was making earlier with those capital stacking and focusing your efforts, it's just selling a private money mortgage loan is much easier than selling actually the credit card stack and the other stuff, believe it or not. Just because instead of giving someone a bunch of debt that the person has to dig a hole out of, right? Like a merchant cash advance, like that's a business loan for a business owner, and they see it as something that they're going to have to get out of. You already understand private money commercial mortgage loans. That is the business model, is to obtain as much debt as you can. So it's part of the game plan. You represent half of their business. So they're just much easier to find. RIA groups, online groups, bigger pockets, like they're just so much easier to find and easier to connect with and easier to sell. You're not selling a whole, you're selling leverage. And they understand that it's their game plan. So
Yep.
Definitely. Same with, you know,
I,
residential.
I just want to expand on what you two brilliant minds are discussing on the commercial dealing in the investor community. It allows you to expand your reach. I'm so sick and tired of fighting as they, like the UWM concept where they're looking to compress commissions and, back us down from 2.75. That mental moron that runs UWM, he don't want to pay anyone any more than 2 points on a deal. I'm not going to do that. And deal with rate shoppers on the investor platform. I want to work with people that are open-minded and forward-thinking. They're engaged, whether it's a bridge or rental or hard money. I've got a lot of experience doing hard money, bankruptcy buyouts, the whole expanded spectrum of misery index, what I call Yale to jail financing. That brings a lot of value to what people, because what I run into, a lot of loan officers today, they have no idea what the hell they're talking about. They don't know LTV from MTV. And in 10 minutes, I can quickly determine, like, they're not problem solvers. And that's what I like. I want to align myself with people that understand the value of problem solving and how to structure a package deal.
Right. Yep. And that's our role. So the solution provider, the consultant, and, the trust factor as well. So what other questions? Do you have any other questions regarding the program, brother?
I'm sure I'll get them answered tomorrow afternoon.
Or do you have a call scheduled with one of our reps?
I think it's Alex.
Alex, okay, yeah. Alex will kind of go through the whole thing with you. Yeah, no, we just hope to bring more value and clarity to the space.
Right.
There's an isolation factor. People don't want to share resources. They don't want to collaborate. So you get really isolated as a private money loan broker. Part of what we're doing here is to remove that isolation, provide a proper foundation and support, which just doesn't exist on the commercial and private money side. There's a lot of it on the resi side. There's like literally nothing on the private money side. So we recognize that, and I've recognized that by training like hundreds and hundreds of brokers on our commercial side, trying to pull resi guys to the commercial side with our lending products. And that's the solution that we're essentially providing to you guys. So if you see value in it, guys, just hit up your rep and ask them for a link to get started, or figure out what starting point that you want to come in at. We have a few different kind of packages, so you're going to have to decide on where you need to start, whether you want more of like a done for you website design with CRM built out, or if you want to just come in at the mentorship package where we give you that foundation of products and mentorship and community. So it's going to be your call on kind of what direction you want to go, but they'll help work you through it.
There's something I do want to ask you about as we step back and examine, the landscape in front of us. When you look at the implementation, integration of AI, quantum computing, and blockchain technology, does it excite you or scare you more?
That's a great question. Well, I'm not on the total up and up, brother, but I will say I think it's going to be very scary for Resi LOs, which I think is why a lot of them are fleeing, not only because originations are down, but I mean, Fannie and Freddie, it's pretty cookie cutter, So I imagine an AI to come in and just kind of start dominating that space pretty soon.
Oh God, if you're an A paper lender, you're DOA.
Yeah,
I can't imagine loan officers going the wayside of the milkman in 5 years. I mean,
yeah. Oh yeah.
Honestly,
Well,
even
they'll
real
still
estate agents. I think real estate agents are going to be gone in 5 to 10 years.
John, I would agree with that. They're just going to go direct.
Yeah.
I hope. I don't like dealing with real estate agents. So
I don't either.
They're lazy.
They're awful people.
If you're in lending, I think we all definitely agree. For me, it's just how inflammatory they cause things. It's like having arthritis or something. It's like you bring them in, and all of a sudden your knees, swell up. That's kind of what they do to transactions. Okay. what was I going to say? Your AI question. Yeah, I mean, that's where I see residential kind of getting beat up. On my side of things, I think it'll just make things easier for us for evaluations. Private money is way more relaxed on evaluations, and hopefully AI can start solving some of that stuff. But you'll always need us because private money lenders come and they go. So, it's all about, it's note investors. That's who our lenders represent, and us. We represent note investors, that have their own guidelines and their own, specialties and own niches that they're coming out with. We had a lender that just totally fell apart the other day. One of our large bridge lenders, they decided to stop lending because of the whole foreclosure, situation, maturing notes, right? These bridge notes. So that's taking place, right? The commercial side is facing some serious issues. But, out of that, what happens is those guys all split apart. They go find their capital sources, and they start a new fund. And now it's been like what? I was going to say 24 hours, but it seemed like 24 hours. They got a new firm. They're hitting a specific niche with, high net worth individuals who want to, get those 10, 15% returns. And so there's always going to be a space. Even when these guys go under, they go out and find more investors who want better returns than they see, in the stock market and the volatility. Note investing will always be around. So anyways, I guess the point I'm trying to make is because there's such a diverse pool of private money investors, I don't see AI kind of coming in and removing us. I just see it making it easier for us to evaluate deals and get more scenarios. So
About 15 years ago, I worked with someone in the DC, Baltimore, Washington corridor, and do you know who the Mars family is?
No.
Do you know who Snickers candy bar is?
Oh, Mars. Okay.
He had access to 50 million a month back then.
Yeah. No, I believe it.
Of course, he was lending in DC, Maryland, and the District of Criminals, but he had to pull back and retreat to Virginia because DC and Maryland were very tenant friendly and landlord hostile, and it took forever to foreclose if you ran into a delinquency. But I'd like to have that funding behind you.
Yeah.
Good Lord.
Yeah. I mean, if you know high net worth people, you could easily transition into setting up just a small fund. Super simple. What we do is we broker on, like, we originate loans for private money firms who essentially have high net worth individuals who either, like those notes or like those short returns that they might buy or sell these notes out. So it's a super easy transition because you're going to get to understand all the guidelines to these private money firms and easily be able to prop that into, private money guys yourself, your own private money guys, and starting your own fund. Like my wife and I always consider whether or not we should invest in a deal before I place the deal. Because, I set these expectations with borrowers. If I already know they're going to take a 13% rate at, and 2 points origination, I say, all right, Jamie, do you want to invest on this one? Because, we could bank in 13% over the next, year on this. And at low LTV, right? 65% LTV, and the borrower's already accepted terms. So my wife and I always consider, before I broker this out and only earn, 2-3 points origination, should we just fund this deal ourselves and bank it in? Right now, we're more we don't get appreciation on notes. However, if I was on the latter half of my life, I would be originating all these notes myself. But there's no appreciation in notes. There's just a kind of a solid return. Right. So.
Yeah, at that LTV, that's safe exposure.
Oh, yeah. Yeah. No, and you're going to pick up, and we would only do deals we know like totally underwrite from the lenders that we go with, but they deny it for just a silly little reason, small reasons, like maybe the FICO's off by like 5 points or something, or, just little reasons. Maybe they missed a mortgage payment, just a year ago. Everybody else is killing them or what have you, just something small. Maybe it's in a rural location. Private money stays out of rural. But if you're comfortable with the market, then yeah. So that's where I'm at. I wish I could invest in more notes, but because we see so many deals And that's what you should be doing on your deals too. If you got money, if you have no high net worth people, just line it up, earn the origination. You know, one of my, Mhm.
What you doing? Is that coming, that money, what you're talking about, is that coming from Bank of John Newfer?
Yeah.
Is
No, I'm
it?
not that rich. I'm not that
Oh,
rich. That'd be nice. That'd be nice. Bank of John Newfer. That's good. No, I have a buddy who started a fund. You know, he represent the same lender I did. He started a fund for his family. You know, just basically his deal is he issues 10, 11, 12% rates.
right.
You know, regular cookie cutter private money loans. And you know, when he doesn't broker, he presents it to his fund and he keeps 3% on the servicing. So, you know, 10% note, he keeps 3%. The family takes 7%, you know, and they all get monthly disbursements every month. Everybody's income is increased by those mortgage payments every month. So that's how it works. It's pretty sweet. I mean, there's a reason why, and it's such a safe investment with those exposures too. So
And he puts it out on a 1 year call.
yeah, I mean, they'll do 1 to 24 months.
Okay.
And they might even, I mean, they might do some perm loans. I wouldn't be afraid of perm loans myself, as long as I knew I could get rid of the paper if I had to. So,
Oh, you could sell it.
yeah.
Well, I'm looking for a turnkey package. I mean, I've been contacted by RELIP, RELIP, and they have a program. So I'm anxious to hear and see what you have to offer tomorrow on the call in the
Yeah.
afternoon.
Well, one thing that we do have to offer over here is, you know, Relip and us, we're totally different. Relip is a more of an agency. So they run Facebook ads. That's their thing. They have like some programs that are internal, but truly they're a broker, just so you know. But one
Do
thing
they
that you are
broker?
going to get, yeah, they're not a direct lender. One thing you will get from us versus Relip is this is more of it's a mentorship masterclass, like modulated program. So this is it's being part of a community of brokers who go through the muck. And what the point I'm trying to make is I've used Relip. Okay, so I know I tried Relip. You know, we've and you get that with our whole, you know, everybody who's part of the program. We share, hey, what's working and what's not working. So that's the mastermind aspect. So I've tried Relip. You know, I've tried several CRMs. Shape is one of them. I've tried this Agent Go-Go system that we use. So part of what you're going to get from here is it's not there. We're getting you educated and we're helping you dig through the muck of operating your business and not getting screwed over by a lot of the gimmicks out there. So you can try Relip, man. I don't want to bang on them too much. I'm sure it works really well for some people, but everyone that comes through our marketing system, yeah, they weren't a fan of it, but you can give it a shot, brother. I mean, I tried it. I tried it for a few months. I wasn't a fan, but that's what you're getting over here. We're different. You know, we're helping you build your own brokerage, giving you our turnkey list.
That's why I'm on this call, because
Yeah.
I want to hear your unique value proposition compared to them, because their program to me was expensive. I'm like, no contract you can cancel anytime. I'm like, well, it's easier to stay out of trouble than get out of trouble. I don't want to jump in and then shit, there's sharks in there.
Yeah. Yeah, no. You know, we're definitely different companies. Mine's more of an information business. Theirs is information meaning training and support, while theirs is more of like it's more of an ad agency. That's really what they're doing over there. And we're not interested in taking splits or commission splits or anything like that. You know, if you come into our program, it's full disclosure every part of the way, who we use, what you should be using. You know, we don't want to take a percentage. We just want to, you know, give you a good support system. So.
And you already have the lenders lined up that we would ever need to utilize.
Yeah, man, you should see the review. I just did a testimonial video with one of our guys named Donovan, and he says they use so we have a few lender databases. So we have our turnkey lender list that we use within our brokerage. You'll get access to that. It's a dynamic list that literally, it changes, like, right? Because you got to pivot sometimes, and sometimes we get rid of reps, sometimes we get rid of lenders, sometimes we got new ones. So that's our dynamic brokerage list that my brokerage uses. Then you're going to get a lender database. So this lender database it's a huge list. There's like over 1,000 lenders in there, private money lenders that cover whether it's multifamily, single family, commercial bridge, ground up. Like, it's a giant list. Now with that, we also share with you the tools we use to acquire those lists. So, we'll give you the database search tools that we use that you'll find online. You could go use those tools, but that using that scraped list actually works a lot better than using the tools, because the tool they push results to the top. So if you advertise, if you pay more money, you get to the top of the list. And so sometimes that's not actually who you want to be working with, right? So anyways, you'll get a few lists, brother. You'll get our dynamic list, depending on what program you get set up with over here. You'll get our dynamic list, and then our database scrapes, our database scrapes, and the search tools where we scrape from. So,
All right. I need to ask you this. I'll light your hair on fire for a moment. Rewind 15 or 20 years. Do you have one investor on that list that offers bankruptcy buyouts?
Bankruptcy buyouts. That's a good question. Probably not, man. That sounds like a terrible situation.
It's high misery index. Yeah, we did
Yeah,
a lot of them.
That's a
20 years.
situation I probably wouldn't even look for a lender for a bankruptcy buyout. I wouldn't wait. So part of what you're going to learn over here is, because commercial and private money span such a broad range of investors, right? You're going to get really tempted into trying to find the right lender for every deal. And this is like the bane of a new broker's existence. You will spin your wheels looking for the right lender for every deal. And we go with the opposite philosophy. You should really just solidify a few really strong private money lenders and originate for those lenders. Your job isn't to originate lenders for borrowers, which is what you get tempted into doing on this side of the space. Your job is truly to originate lenders, it's to originate borrowers for your lenders. So that's something I would just say no to. And you're going to learn how to say no through our program. Hopefully that's what you're looking for. I don't know. If you want to say yes to every deal, that's not the philosophy. That's not a winning strategy in our experience and our training.
I hear you. Although there are a few occasions in life where sometimes this does apply. The bigger the problem, the bigger the paycheck. Sure.
Well, that whole bankruptcy buyout situation, right? We need some more clarity to that. We have lenders. It depends on how deep you are, but we're just doing mortgages, right? So it depends on kind of what the bankruptcy entails. So it's like a personal or business bankruptcy, and then we would handle the foreclosure side of it. If they're in notice of default versus like full on foreclosure, we have lenders that'll fund one day out of bankruptcy, but not while you're in the bankruptcy. I've never funded a bankruptcy bailout, but I have funded deals one day out of bankruptcy. I have funded deals where they're notice of default. The bailout loans, when they're in foreclosure, are super difficult to get done. I would imagine that lender would want equity and not debt. But yeah, that's my response.
Yeah, that's a different conversation. So I just hit you with a very convoluted circumstance.
Yeah, that's okay. Yeah, I just don't do business loans either. So, it's just mortgages. That's what I decided. I've done business loans. I did that for a few years. And I just migrated my entire attention to private money mortgage. So.
Okay, well, I'm going to ask Alex tomorrow, what distinguishes your platform from Relic? He'll have that information.
Alex, they know about Relic. See, Alex came from selling an agency service. So part of our program, you get to participate in lead participation, Facebook campaign, lead participations. And she works with that. I mean, she came from that agency. So they're in direct competition with Relic. So they would tell you all, she'll definitely have some data for you on Relic.
Okay, good.
Yeah, for sure. But it's not going to help you place loans, I do not think. They're going to try to get you leads, and they're short form leads versus long form leads. That's what I noticed. They have a little AI that talks to the clients, but it's not, a replacement. to your conversations for sure. I just found the leads that I was getting, brother, was some of them, it was weird. It was like some people had no clue. It was very weird. The people that were, some of them were like super old people who had no clue. They're like, I don't know anything about mortgage, getting a loan or anything. So it
Oh,
was just
geez.
strange, the leads that I was getting. That'll happen to anybody, I think, on any campaign for some reason, but it happened a lot over there. They're short form leads, so people don't have to have a real deal, a real scenario to fill in those ads. So I just be wary, man. I would tell you not to do it, just having already experienced it. So,
But and that has a lot of insight, what you just said.
Yeah.
So you've already walked through the minefield, so I'll follow you.
Yep. Yep. That, you guys, that's the entire, that's what we did here. So that's what we do here, is helping to prevent you from walking through the minefield. That's why we call it masterclass, like mentorship style program. Right. So we give you foundational understanding through modulated training. We give you our app packages. So you don't have to kind of create your own. We give you marketing material as well as our lender lists, and then just continued calls, continued research and development every single week, as much as we can give you, to make sure that you're not falling into more minefields. So
Yeah.
in terms,
You've got a really forward thinking attitude. I like that.
thank you, brother.
Got that good vision. Position yourself in front of change, because God knows we need it. You know, change is my favorite acronym. Do either one of you know what change stands for?
No, go ahead.
You're going to like this. This is worth writing down. Choose having a new growth experience.
That's good. That's good.
And the lending community is in massive change. God knows this country needs plastic surgery.
Yeah. Yep. The problem with growth is it's difficult. People don't want to grow. I'll tell you, I've grown a lot over the last few years, and man, is it tough. So
yeah, you got to get comfortable being uncomfortable.
That's right. That's right.
Okay, thank you for being so gracious of your time. I got a lot of benefit after listening to this call.
Right on, brother. I'm happy. Yeah, thank you guys very much. That's the purpose of this call, is just to get to know me, get to know the program a little bit better, what we're doing here, and hopefully we can all win together. So, yeah, John, nice meeting you. Charles, God bless you, man. Thanks for the analogy or the acronym.
Now, do we have access to you directly?
Yeah. So in this program, depending on kind of where you land, yeah, you'll have access directly to me. We don't have like a Slack channel, but you'll be seeing me pretty much every week. So absolutely, you'll have access to me and my phone number and my email and everything. Absolutely.
Okay. All right. I'm glad I plugged into this call. John, good questions here on your end.
Thanks, Charles. You also.
Yeah, all right, guys. Take care. Thank you so much. See ya.
All right.
Thank you.
Thank you both.